Time now for top calls. Look at some of the big movers on the back of analyst recommendations. And we start with Marathon Petroleum, cut to neutral from overweight at JP Morgan. The analyst citing that while Marathon was one of the top performing oil refiners at the start of the pandemic, the firm now sees less upside potential on its price target compared to its peers. Shares, though, still slightly higher. Next up, we have Carnival Cruises upgraded to equal weight at Wells Fargo with a $9 price target. Analysts see low near-term refinancing risk and its annual EBITDA forecast dragging down that price target. Shares still higher, almost 6%. Finally, Canaccord analyst Susan Anderson initiated coverage of Ulta Beauty, giving it a buy rating. Anderson cites resilience among beauty brands and expects Ulta to gain share with its loyalty program and its social media presence. And Ulta also higher as well, 1.7%. And Scarlett, those are some of today's top calls.
Well, speaking of resilient brands, Katie, let's talk about Apple because it is jumping on the buy now, pay later bandwagon. It's launching a new service that will give consumers the option to split purchases into different payments. Bloomberg's Mark Gurman, who covers all things Apple, joins us now with some details. And Mark, in your reporting, you point out that it is launching this buy now, pay later style service after a lengthy delay. What can you tell us about the rollout time here?
Yeah, so Apple Pay Later has been a long time coming. They've been working on this for nearly 3 years as part of a new financial products push, right? As they're looking for new areas of growth beyond the iPhone, the watch, and their standard products. They first announced this in June at their developers conference nearly a year ago. It was supposed to roll out as part of an iOS 16 update last September. They've been testing it with both corporate employees and retail employees, and now they're starting to roll it out to end consumers. Now, this is going to be based on a random selection basis. So if you have an iPhone, you're on the latest iOS 16.4 update, maybe you'll get an email starting today asking if you want to try out this pre-release version of Apple Pay Later, and this will come out for all users, they say, in the coming months.
And talk to us a little bit about Apple financing, basically this new subsidiary that it's using to fund the loans.
This is a really big deal. So this is the first time that Apple is going to use that cash balance on hand in order to provide loans to consumers. And what they've done, like you said, is they set up this subsidiary called Apple Financing LLC. Now, Apple has also developed its own credit check technology and its own lending mechanism where they're going to scrutinize past customer purchase history, whatever you've spent at an Apple retail store or online store, which movies you've bought, if you've paid off your subscriptions and maybe your Apple Card installments, your overall credit score, right? They'll use that data to determine how much of a loan you'll get for buy now, pay later. That loan range is actually quite small compared to what you're getting from other providers, but they're no interest, right? It's 4 payments over 6 weeks, and the loan amounts are between $50 and $1,000. And if you pay that off, you can always get more money for a future buy now, pay later transaction through Apple Pay.
Yeah, Apple had, what, $51 billion cash on hand for the quarter ending December 31st. So that's a lot of cash that it has at its disposal. It's interesting that it's taking on this credit risk as well. We did see shares of Affirm plunge on your reporting, along with declines in PayPal as well. What do we know about how other these payment services companies are responding or likely to respond to Apple?
You know, they have broader offerings, right? In the case of Affirm and Klarna and PayPal, they go beyond this $1,000 loan limit, right? They offer broader packages, different plans with different months, different rates and such. Affirm and Klarna and PayPal are heavily integrated into checkout portals and various websites and applications. But the benefit for Apple is that it's embedded in the iPhone. Right? They have over 1 billion devices running around where this buy now, pay later is built in. In the cases of Klarna and all these other providers, you have to sign up, you have to download an app. But every iPhone user already has Apple Pay up and running on their product, right? So that is the inherent advantage Apple has, is that built-in integrated nature and the seamlessness and simplicity of the user interface, right? But we'll see what happens and how consumers react when this thing actually rolls out broadly.